Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video, I'm going to share with you guys 5 of the best performing companies in my portfolio and the 5 of the worst performing companies in my portfolio. I've been meaning to do this video for quite some time, so here it goes. I'm going to share with you guys 10 companies, the top 5 and the bottom 5 of my portfolio. I've shared this with you guys over the last whatever years, but we haven't done it for quite some time. So here it goes. You probably know some of the best performing ones because we always talk about it, but we don't really talk about as much some of the worst performing companies. And that's what we're going to start with. We're going to start the worst companies, and then of course we will look at the best ones. Now, as you know, the S&P 500 right now we're up about 13%. So some of the companies I own in this portfolio they down not because the company there's something wrong with the company. It's some of the sectors that are not doing well. So for example, some of the companies include the energy companies. So for example, utilities, technology, because of AI, they're doing really well. Industrial sort of are tagging along with those two. Healthcare hasn't done well. Financials is done decent. Energy, consumer staples have not done well at all, as well as consumer discretionary. Then you've got communication services that includes Meta and Google and so on. So they're doing really well. But the indices, in terms of the index itself, is about 13-14% up. So some of the companies that we're going to talk about today is naturally because of the sector they're in, they are down a lot. It's not because there's anything wrong with the companies themselves. So let's get started. So we just look at the same information that we normally look at. I'm not going to read out all of that information. My focus will be basically how much we're down for some of the companies. For all the companies that we're going to talk about today, I want to mainly focus on the price, how much we're down, how much are we up, what percentage, and my, of course, overall plan moving forward. And the first company we're going to talk about today is Canadian Natural Resources. This has been in the portfolio for about a year, I think, down about 10% or 487%. This is one of the most efficient oil producing companies in the world, and they have excellent dividend of basically over 5%. On top of that, they have been increasing that dividend for over 23 years. So as you can see here, they have excellent free cash flow. Right now they've got upside of about 17%. So $36 per share is where they think the price should be. And that payout, that basically is covered by that free cash flow, which is what one of the reasons why I bought this company. This is not in my portfolio just because of the growth side of it. Of course, it will be amazing if the price goes up, and of course, if we were in the green. However, in the long run, of course, inshallah, that will happen. But for now, the reason is in the portfolio is because of that growing dividends that they have been increasing for a very long time, and they have a low beta. So I want to own some of those companies that have a slightly lower beta because, of course, it balances your portfolio. So that's the first company that we're looking at today. Number 4 is another energy sector. We've already seen that sector has not done well, and this is one of the companies that in that sector, amazing dividend, 7 years of increasing that dividend, 28 years in the last 5 years. You get over almost a 4% basic dividend yield right now, and they have an excellent free cash flow over $5 billion. Right now they have a 29% upside from where we are. $137 per share is where they think the price should be. And again, is probably one of the best oil companies. Well, there is a company that is very well run with an excellent dividend, and right now is down because of the overall market is down. So I'm down 717 pounds or 16% right now, which is absolutely fine with me. And again, I'll tell you exactly how as we go along what I will be doing with these companies. This one I'll share how many stock shares I own of this company in a second, but I think it's almost closer to 200 shares. This one is about 40 something shares, and I will be buying as while they are still down some of these companies. So I'll tell you exactly which ones I will be adding to. Novo is another one that is down about 876 pounds right now, about 17%. I've talked about this company for quite some time. They're not done because they have a terrible business. They are, when it comes to the global diabetes and obesity sort of a thing, they are the leader when it comes to that. Of course, Eli Lilly is taking market share from this company right now. But in the long run, I don't think this company will have any issues. Right now, it's about 25% upside from where we are, 17% down in my portfolio so far. I think I've got about 100 shares, so I will not be buying any more at this point in time. I'm just going to leave it alone because there are other companies in my portfolio that are still down a lot that I want to add more to. So I feel like I've got full position when it comes to this one. But again, amazing company, very well run, $9.5 billion of free cash flow, expected to grow about 8% when it comes to EPS. Revenue is expected about basically 5%, 25% upside from where we are. $71 per share is where they think the price should be. My average is I think about 60 something or whatever it was. But yeah, about 17% down right now, and that while I wait, I'm just going to collect that dividends about 3%, which is absolutely amazing. The next one is slightly different, so another sector that has not done well this year. I think if we go back here, let me see where the REITs are. Realism, okay, so it's about 3% up, so the overall sector has not done well on as well. This one I'm down about 17% or £1,163. And if you look at it, this is basically a Morningstar is saying right now it's about 20% upside from where we are. Free cash flow is fine because again, remember these companies, they pay out almost 90% of they expected to pay out 90% of their net income or profits, if you like, as their dividends. So another great company. I have been buying. I will continue to buy, inshallah. I don't know how many shares I own. I'll share with you guys at the end of the video. But another really great company. It's been in the portfolio for about a year and a bit, I think maybe for 1 year. So I'm happy to hold on to this one for quite some time. The next one that we're looking at, the last one is UPS. UPS has been down for so long. £3,700 down, 47% down. So almost losing half of my money right now. Again, am I selling it? Absolutely no chance. If you look at Zoya right now, it says it's not Sharia compliant. But what I normally tend to do is when you use Zoya, you cannot, if you use the 12 months average when it comes to the market cap, you'll be losing a lot of money. So you can use the 24, which is absolutely fine, or the MSCI, which is about 36. Last 36 months, okay, average of that basically when it comes to the market cap, instead of using the 12 months, because you're going to lose a lot of money if you did that. You'll be literally buying companies and selling them next month. And again, that's not a rule that I made up. If you go on Zoya, it will tell you exactly that. So it's still a Sharia compliant company, 33% upside from where we are right now, 7.7% when it comes to that dividend yield, which is absolutely ridiculous. The payout ratio is very, very high, 87%. Some websites are saying almost 80, 90%. I'm not really worried about this company. Even if they cut the dividend, the next few months will probably be similar to what's happened to 3M. They might need to start cutting that dividend, use some of their free cash flow to build the business again. The margins are improving. That's one thing I know for sure, because the earnings report, the reason it came out, they've more or less done some basically what FedEx has done a few years ago. So they basically no longer working with Amazon, and for that reason the company went down a lot. And since then, it's because of the union and all of the things that was happened to the company had a massive impact. And that's why when I bought it, I think I bought it when the stock was over 150 something, whatever it was. So I'm happy to hold on to this one while I get paid every single month about $6 and every quarter $6.56, and we'll see what happens. I'm not buying more, but if it goes down maybe below 80, I'll probably buy a few more shares. So that's the worst performing companies, and if you add that whole thing together, it's about £7,000. So I'm down £7,000 based on these companies. I'm not really worried about any of these companies. Like I've said, I'm a long-term investor. I just want to hold on to these companies, get that dividend, and for now forget about it. And I'm going to use this opportunity, especially those four, UPS, I'm going to leave it alone for now, but the rest of them, if I get another opportunity, I'll be buying. This one I have been buying over the last few weeks, and this one also I'll be buying. This one I think I just need to add a few more shares to get to 200 shares, and I'll leave it alone and then see what happens. I think it will pay off inshallah in the long run. Now what we're going to do now is look at the best performing companies from number 5 to 1. So 1 will be the best performing company, if you like. The first one is S&P Global. I'm up about 22% right now, or about £1,000. Excellent dividend. They have been increasing that dividend for 50 something years. 20% upside from where we are right now, which is absolutely ridiculous. So this company has come back so much to the point where now is actually undervalued. I really like the company. I want to hold on to this one for a very, very long time, inshallah. So we'll see how that one goes. The next one is Visa. Visa has been in the portfolio for I think about 4 years now. 47% up, £1,600 up right now. I wish I bought more. I think I own about 20 shares. At the time when I was buying, it wasn't actually cheap, but then slowly, because the business of course improved and so on, and it's got amazing margins. You look at this profit margin, return on equity, return on invested capital, free cash flow over $22 billion, which is absolutely ridiculous. They're expecting to grow EPS revenue, basically double digits in the next couple of years. Right now, as you can see, it's about 10% downside from where we are, so the price should be about $306 per share based on Morningstar valuation. Again, 338 is where it is right now. Really great company. Of course, it's Shariah-compliant. They don't deal anything with the river side of things. They are basically a business that basically facilitates that transaction from A to B. Next one is a very small, it's not even as small, it's about 60 billion market cap, but it is a company that not many people are aware of. I wish I bought more. In fact, I actually trimmed it a few years ago, or maybe about a year or so ago. £1,746 up, or 85%, which is absolutely ridiculous. They have excellent dividend. They have been increasing that dividend for almost 20 years. 6 more years, this will become a dividend aristocrat. $8 is what you will get for every share of this company that you own. Is very safe dividend. They have excellent free cash flow, and right now they are fairly valued, which is absolutely amazing. That fair value, I think, even if you can get below, right now it's 420. If you can get below 400, I think that will be a good buy for this company. So yeah, that's number 3. Let's look at number 2. Number 2 is ASML. No surprise, this company has done absolutely amazing job. Just in the last, last 4, 5, 6 weeks or so, 3,000, almost a 4,000 pounds up, or 45% up right now, which is absolutely ridiculous. Remember, not long ago, especially when Trump was doing all the madness about the terrorists and so on, I think it was in the red, and right now I'm up for basically 45%, which is ridiculous. As you can see, they have a very small dividend, but they have been increasing it for the last 15 years, and right now it's up. Basically, it's got downside about 7%, so $950 per share is where they think the price should be. Right now it's about $1,000. They've reported today, I believe. Was it yesterday? I need to look at over the weekend. I need to check out inshallah this Saturday I will check out the earnings report to see what has been said. I haven't had the time actually to look at it. And the final company you probably already know, and that is Broadcom. Broadcom is one of the companies that I bought in 2020, I believe. Since then it's up 600%, over 600%, £6,760 in the green right now. It's got excellent dividend. When I was buying this company, the dividend yield was about 3%. Since then it's gone up so much. So it's been absolutely ridiculous. It's just the company has done absolutely amazing job. At the time when I was buying, not many people were aware of this company. I was buying it because I looked at their financials. It looked good. I liked what they were doing. I understood the technology they had. So yeah, since then they bought VMware, and now it got into not only the hardware side of things, they also in the software side of things, which is absolutely amazing. So they do the chips, they also have the software side of things. Right now it's about 8% downside from where we are, which is great for this company considering it's up so much. It's about 8% downside from where we were, $325 per share. That's what they think the price should be. And as you know, that 8% is not a lot when it comes to this company, because it can go up 10% today and 20% down tomorrow. So, but it's a great company. I really like the business. I'm not selling anytime soon. I've trimmed it here and there, but I'm gonna leave all of these companies. Although I'm up a lot in a lot of these companies, and I did take some profit off Broadcom, Cummins as well. S&P Global, I've never sold it. I wish I actually bought more. And potentially I might be buying more of that as well, if it continues to go down, inshallah, in the long run. But yeah, that's the 5 best performing companies in my portfolio. And now what I'm going to show you is how much I'm up when it comes to these companies. Remember, here we've had about £7,000 down, and when it comes to here, we've got about over £15,000 in gains. I'm not taking that at all. I'm just going to leave it in there, of course. And again, it's amazing to, alhamdulillah, have these percentages are up and down, whatever. But I'm not really looking at the portfolio and thinking about the next month or the month after. I'm thinking about long term, and that's probably we're talking about 10-15 years inshallah from now on. So I'm gonna try to grow this portfolio. So if I trim stock and I think it's expensive, if I get an opportunity somewhere else and I don't have the cash, I will do that, because again, if I feel like Broadcom's gone too far and there's another company that's great, that's undervalued at this point, and I don't have the cash, of course I will trim it and then buy another company. That's what portfolio management is about. Because I've had companies like, for example, Merck, that have a that was up almost £1,000 at one point, and right now is almost, I think, is in the green right now, but it was in the red recently. So you can easily lose that money. So sometimes it's not bad idea to take some profit off the table. I'm not saying go away and sell it, but if it's too expensive and you need the cash for something else, then I normally don't hesitate to take some profit off the table. But that's what I wanted to share with you guys today. And one thing I'm going to show you now is from the Sharia-compliant side of things. You can pause the video and have a look at. The only one that you just have to be careful is basically this one here. Of course, is REITs. Again, I'm not using the 12 months. This is based on the 12 months, but you can also use the 36 or 24 months if yes, basically that's what you want to do. But that all of them are Sharia compliant. And so quickly, just to show you all the companies that we talked about, I'll pause the video and you can see that what I've shared with you guys, the top 5 companies up to here. So each one of them, they might have changed since I've actually prepared that video, but there you go, they're all in there. And so yeah, and the bottom half is this. So UPS, you can see that right at the bottom, the Mid-America Apartments, and then Novo, and then we've got EOG as well as Canadian Natural Resources. The rest of them, these companies have come down. Look at this one. This is another company that potentially I will be adding to in the next few weeks, because it has come back down and I really like this one. So I'm very, very happy that's happening right now. Salesforce is doing well today, so they've made some announcement, whatever, so it's in the green right now. And then of course, yeah, the rest of the portfolio, you can pause the video, have a look at what some of these companies. But I own 20 shares or 30 shares, 30 if you like, and my average for this one is $48 per share, which is absolutely crazy. ASML, you can pause the video, have a look at that, 654, and then about 17 shares. Cummins, let's have a very quick look, 12 shares as well as $225 per share. Visa, 20 and $221 dollars per share. And then S&P Global, 16 shares, 350. Right now is over 470. On the bottom, let's have a look so you can see exactly where I am. 150, let's call that 150, 65 shares. This one here, I've been buying over the last few weeks, 55 shares, $155 in terms of average side of things. This one here, 100 shares, $67 per share. Is actually higher than I thought. This one, let's see, have a look, 45 shares, $121 per share. And finally, this one here, closer to 200. I've got 7 more shares to buy, and $33 per share is basically where I am right now. There you go. That's the basically the top 5 performing and the worst performing companies in my portfolio. I'm going to continue buying high quality businesses, including the ones that we talked about today. I'm not trimming anything, inshallah, in the next few months. I'll be adding a lot more money to the portfolio. I will be doing portfolio update very soon, but I will be adding a lot more money because I need to add about £17,000 between now and basically on the in April, and that's my goal, inshallah. And I will share with you guys whatever I'm doing along the way, inshallah. Have a wonderful day. Assalamu Alaikum.